I think Binance rolled out a Uniswap type platform. I heard news about it. I haven't personally traded on it yet, but that's another thing. We're just seeing a lot of people copycatting Uniswap right now.
Yeah, I saw that out there as well too, Jacob. It's interesting, right? Everyone's going to try to like toe the line and copycat exactly.
Tezos, I was on the blockchain and boost call on Tuesday, and they had a guy from Tezos on talking about Tezos' DeFi ambitions, and they're launching a DEX called Dexter this month for sure, was the quote from the gentleman Tyler who was on the call. And so we'll see.
We'll see. Chad, you're chiming in there.
Binance put $100 million also fund together to move people into their chain. They just announced that yesterday.
That's not chump change.
No.
What kind of people, Chad? Uniswap people?
Look, I think they launched and didn't have a lot of like movement over because it's kind of that time of Ethereum gas costs. So you got your Ethereum people that have their infrastructure already writing smart contracts to here, right? So if they don't see a solution coming down the road, you'll start looking at these. And hey, look, it's $100 million, right? There's a lot of startups because there's a lot of people building shit on the ecosystem right now that are just getting started. So you can go raise $250,000 from Binance. There's the allegiance we're starting to see there's allegiance, and we're starting to see the fractionalization of the allegiance going, and people will go where the money has, like as they always have.
Well, that's what worked for Tezos, right? Tezos just flung money at developers. And I don't know what EOS's fucking malfunction is, but they should be doing the same, and they're not nearly enough. Like, what are they going to be, the richest guy in the cemetery? Well, we all have a lot of confidence in Binance as being like a best of breed. I would rather be on a Binance DEX and liquidity pool than honestly anyone else that's proposing one. I mean, does anyone disagree with that?
No, I'm right there with you on that. I mean, like, you're going to have all these things pop up you've never heard of. I mean, we have things called like sushi and it's gonna start getting crazy if it hasn't already. So I think people would definitely warm to a known quantity, no matter how much they complain about it.
Right. Although Tron and their DEX, they just announced this morning a partnership with 1inch, which is a DEX aggregator and not fraudulent company. So I thought that was really positive for Tron that they have this announcement. Tron, we worry about Tron because it's so heavily controlled by Chinese interests. You wonder how much decentralization is present there. Okay, someone accidentally sent $1 million in Tether to the Swerve token contract, which meant it was lost forever. Or was it? Someone from Tether responded, we'll take care of this, given the size of this transaction, we'll prioritize this in our customer service. So they're going to freeze these ERC20 Tether tokens permanently, and they're going to reissue these tokens to their owner. They're going to break this transaction, not break it, not undo the transaction, but freeze the tokens and reissue. And this is a feature of all stable coins. So all stable coins are lousy choices for people that are trying to extort, money through ransomware, because they can be frozen and then basically like destroyed. If you freeze someone's coin permanently, it's gone, and then the issuer, the central authority for that stable coin, can reissue it to the rightful owner. This is not being very, very well understood, I don't think, by the marketplace. I almost fell out of my chair when Jacob explained it to me. Do we have any team commentary on whether or not the marketplace understands that a cryptocurrency transaction in a stablecoin can be undone?
Yeah, it's a very interesting situation. In terms of stablecoins, this really pertains specifically to Tether and to USDC and stablecoins that are issued against off-chain collateral. I think it gets a little bit more interesting when you consider the fact that Wrapped Bitcoin, RenBTC, these off Ethereum chain assets that are being wrapped on Ethereum, it's essentially revocable. So there's some alarm, in terms of the decentralized versus centralized argument. But there's also, I think, a benefit to the retail user.
Well, I think there's a big benefit. I was talking to our friend Steve McClurg that runs PayDrop, which is a cryptocurrency payment sender, kind of like a Western Union. They specialize on working with companies to pay employees that are far flung. And as a business owner, I love the idea that if we make a mistake, we can fix it. I mean, this is a big drawback for businesses embracing crypto. And clearly, the regulators that have approved these stable coins have mandated this feature. I mean, they want their ability to break transactions, just like the banking system. You know, if you accidentally wire $1 million to the wrong bank account in the United States, like, you can get it back. You know, they can't say, no, I'm not giving it back, because they agree to play by the rules of United States banking. If you're outside the United States, you know, can be a little more challenging, but these coins are basically offering this as a feature to increase their approval by regulators and their adoption by industry. I just think that we won't spend more time on this, really. There's not much more to the story. That's a great point, though, Blake, about the fact that wrapped Bitcoin is also in the same boat as these stable coins. Anything that's got a centralized, custodian.
Yeah, and I think you hit the nail on the head there, where this is starting to look a lot more like the traditional banking system. In the case of misfires in terms of transactions, but also in death or escheatment, and in some of these other situations where you would need a transaction corrected. This type of infrastructure is pretty interesting for the advancement of the space.
Yeah, and it's kind of this freeze function is different than undoing a transaction, because they don't have to send the money back. They just kill those coins, reissue. Kind of almost a little bit more elegant than having the bank send the money back.
It'll be interesting to see what the effect on market cap and kind of abandoned market cap and how that affects price going forward. I'm assuming this is going to only grow over time, but that remains to be seen.
$13 billion in Tether, not a small number.
Not a small number at all.
And when we're using this as DeFi collateral, we spoke 2 weeks ago about custodial versus non-custodial collateral. And wait till someone does a DeFi contract with someone, and it turns out that the person on the collateral end was fraud, and then all of a sudden they don't have the collateral they thought they had. It's going to really make on-chain collateral look a lot more attractive than custodial collateral. But even though, on-chain is, this wrapped Bitcoin is viewed as on-chain, but it's custodial on-chain versus maybe a REN wrapped Bitcoin, which doesn't have this freeze and reissue feature. If that becomes there's going to be people that lose money in DeFi using custodial collateral on the other side of their transaction, and then it turns out the other side of the transaction was stolen collateral, and all of a sudden they did a deal with a ghost. Or the collateral's frozen and reissued to the rightful owner. And meanwhile, you're caught holding the bag. Something to keep an eye on for our DeFi PMs. I wonder how Binance is going to address this with the collateral they bring in. Binance coin is not centralized. They're not going to reissue the blockchain and make people whole if there's been a piece of fraud happening. I don't see that happening from CZ. Does anyone?
You're right. I don't think so.
I don't know. Should be interesting. All right, that's all we need to say about that. Let's talk about hostile takeovers.
Yes.
Our friends at C.R.E.A.M are trying to get the price of Gnosis. Am I saying that right? How is Gnosis? What do you guys call this one?
I call it Gnosis, but
Gnosis.
I don't know.
The G is silent, like in pneumonia?
Yeah.
Maybe the G is silent. Gnosis, they've got their price up about 25% in the last 48 hours. Or 50% maybe even in the last 48 hours. Let me pull a 7-day chart. Because they took a look at how much cash Gnosis is holding, and they're holding $90 million of cash, but yet their book value represents only, I think, a third of that, like around a $30 million book value. And they want to, they have 10 million Gnosis outstanding. So that's easy math. That's, they have a $75 million market cap according to CoinMarketCap. Does anybody want to talk about this and why C.R.E.A.M is saying that this coin is worth $187? They've got a lot of cash on the balance sheet, I guess. They got a $7 million a year burn rate with their 65 employees. And they're using the $90 million they have to do yield farming and sushi swapping instead of trying to drive up the price of their token. C.R.E.A.M is acting like a activist shareholder and trying to shake management's cage to get them to basically either do a tender offer for their own token with the cash, or somehow create a program that's going to help the token price rise. There's not a lot of precedent in the cryptocurrency industry for this type of tender offer or hostile takeover. I can't really think of any.
Blue Star Airlines.
There's plenty of it in the stock market.
Right.
Like,
Yeah, this is like
these aren't
old
stocks.
school, like Wall Street 80s stuff, right?
I mean, what's the plan here? Do they want the Gnosis management team to use their cash to buy Gnosis tokens? Is that a good use of cash?
I don't know, but it's going to be interesting because, like, I think you're going to see more of these types of things, right? Well, you're going to see like activist token holders not happy with maybe a particular pivot a dev team is going in.
Well, this has been, kind of rampant for, 5 years, 6 years. Ethereum Classic probably, the most notable early example. But you're starting to see this now with some of these DeFi communities where, you have large aggregating platforms like a Yearn Finance that is going to end up controlling a significant portion of the Curve DAO token, versus the Compound Pool, which is similarly accruing a significant portion of the Curve DAO token. And now they're going back and forth on, voting for which gauge gets the better allocation of these Curve DAO tokens. This stuff is, when you have an open, permissionless system and this much money at stake, of course it's going to happen. I think it's just going to get more pervasive.
Well, we can find Jeff Dorman from Arco did a 15-part tweet that kind of talks about their plans with Gnosis to try to unlock some more shareholder value, which is a really interesting way to look at it, because we've just finished spending the last 2 years telling the SEC that these are not shares. But we're going to try to unlock some shareholder value here, treating them like shares and trying to do like regular shareholder activism. So far, so good. They're up. They've got the price up. Not an insignificant amount in the last few days. We're participating in this rally because I like the idea of $90 million of book value on a coin with a market cap that's below $90 million. I don't know why exactly ARCA is suggesting that this is worth $187. Maybe that's something to do with the fact that a large portion of these tokens are locked up for long enough time period that it becomes like essentially locked up forever for all intents and purposes. Should be an interesting one to watch. Jacob, I'll stop sharing. I'd love for you to talk a little bit more about what happened with Sushi Swap and their hostile takeover of Uniswap, and like the effect it's had on Uniswap, and how much money the person made that built Sushi Swap before he or she did this exit. Anything you want to talk about there?
Yeah. Well, I want to go back to Gnosis. Like, another reason why it could be undervalued is it's got the same like total value locked as Kyber Network, which like they both have 9 million in their DEX ecosystem. So like that could be another sign of Gnosis being undervalued. I forgot where Kyber's ranked. Is Kyber's like 50th, or do we know? Kyber Network.
The difference is Kyber is a DEX, correct?
Mm-hmm.
I mean, and Gnosis is a prediction platform, and it might not even be the best prediction platform. It seems like Augur is got a bigger footprint, and there's even another one I think that is a prediction platform, and the prediction markets here. Let me click on this. Like, do they?
Augur now has like Rep V2 now too, to deal with like disputes or something.
Yeah, all of these prediction platforms, Jacob, should become DEXs. They would be a lot smarter if they did. Maybe that's part of Arca's plan. Maybe like a non-natively digital asset DEX would be the way to monetize these things. That would be interesting. Let's talk about Sushi and Uniswap though.
Yeah, I'll share my screen here.
Stop sharing. And then C.R.E.A.M Finance.
So Sushi Swap, so to answer your question first, so the guy who ran Sushi Swap, he goes by the name like Chef Nami Swap or whatever, and he made approximately 30,000 Ethereum from this whole sushi swap thing, and he sold on the way down, so it kind of angered a bunch of people. So it went from I believe he sold around like $5, and like he crashed the price by over 50%, just moving the market, because he did 2 transactions, one for like both 15,000 Ethereum transactions. So he made a lot of money on it. But what was interesting, so like I was kind of nervous about Sushi Swap just because it's this unknown guy, and like there could be errors in the code. And what happened after, once he did this trade, the community was outraged, and then he decided to hand over the reins to one of the head guys over at FTX and Alameda Research. And they're both like, FTX has some interesting financial products, and Alameda Research is just like a prestigious company, and like it built a lot of trust back in the community after this guy walked away with like 30,000 Ethereum.
$10.5 million approximately.
Yeah, $10.5 million. And so, in terms of yield farming, like this is like a great platform still, in my opinion, to yield farm, especially like what we did with Ampleforth, like getting into Ampleforth this week. And then I got into this pool called AmpleChicks, and you can see right here, if you guys are looking, the APY right now is around 1,000%. And then another cool thing about Sushi Swap is they added a staking component too, which is very interesting compared to Uniswap. So like, I still have to understand this more. So like Uniswap, it's 30 basis points and it goes into the liquidity pool. So as your liquidity, if you become a liquidity provider, you're constantly earning fees. I'm trying to understand the staking component, but like you stake sushi, and you're earning fees from swap fees based on so I don't know if the swap fees are based on from the like Uniswap type exchange, or just I have to look more into the swap fees. But Sushi also has a staking component, which Uniswap doesn't offer. And then from like the exchange background, I don't know, it's taking a little slow right now, but it's basically like a Uniswap type interface. It looks exactly like Uniswap because they forked it. But in terms of hostile takeovers and getting back to the topic at hand, let me go over to Uniswap info, and you can see like the migration happened, I believe it was this day, September 7th, and you can just see it was like a 50% drop. Just took away all that liquidity from Uniswap. So these are the volume. This is Uniswap's doing about $400 million of volume in the last 24 hours. Yeah. And how does that compare, Jacob, to the current Sushi Swap volume? Can you pull that? I have to find I don't know any analytics websites right now for that. So, I'm sorry.
How about like Coinbase? What's Coinbase doing on a given day?
Coinbase is around, I believe Uniswap's doing more. I believe Coinbase is around 350 million. I'll look at it really quickly.
Sushi Swap's doing about 225 million.
Yeah, and then you can see the volume just kind of dropped off. So it took away a lot of the liquidity from Uniswap. So
I think there's a net benefit to Uniswap here. There's obviously more liquidity now than before. But Sushi Swap, with the the way that their incentive is designed with the staking, it's I believe 0.05% of fees go to stakers. So now you have an exchange-wide revenue share, whereas under Uniswap's model, it's pool by pool, and you can really think of it as sort of a perpetual short straddle on the pair, where the volume just increases the premium of that short straddle. But if the price is moving, then obviously you're subject to impermanent loss. So if you think of this in terms of traditional instruments, you now have two very, very different, very competitive financial instruments. It'll be interesting to see which model ends up winning out.
Can we talk about governance too, Blake? Because isn't the governance process a big difference?
Yes. So that's one key difference, and that was sort of the next point here is Uniswap isn't done, it's not dead, and they are working furiously on V3, and I believe that's going to include a Uniswap token, and then open that up to governance. So, these governance tokens obviously have become, the big money makers for yield farming. You get that community involvement, you subject it to some of these governance wars that we've seen, and Uniswap has not quite had that yet. So the coming month of this battle between the two, and whichever other ones start to emerge, I'm sure there's going to be plenty. It's going to be very interesting to watch.
What's stopping Uniswap from launching liquidity pools that are not ERC20 liquidity pools? Tendermint liquidity pools, beating Tezos at their own game. Like what is whatever they use to set, whatever it's called, 567 or whatever their protocol is called, Bitcoin Cash liquidity pools. Like why is it that Uniswap is not branching out into other blockchain protocols?
I think part of it is the actual architecture of Ethereum, the account system and the atomic swap basis for these things versus UTXO models, which started to make that a bit difficult. The other piece is Uniswap is very well integrated with a lot of platforms, and that's going to be the big question for Sushi's survivability: is can they rival that level of technical integration?
Right.
And they haven't had to, right? They kind of been the king.
Yeah. Well, Sushi's already, they're tied up to 1inch, obviously on FTX. So they're already making a lot of progress. And they have the people that stuck around after the chef left the project, or at least, economically stuck to being involved with the project. I think the people that are left in Sushi Swap are, it's going to turn into one of these Ripple Army, Link Marine type factions.
Interesting. Are these aggregators going to make it so that way each firm specializes in their own blockchain, and then 1inch crawls across blockchains, or Total I think is another one, and like make it so that way it's seamless to the end user? Are we going to start logging into the 1inch website when we want to get liquidity instead of logging into Uniswap?
Yeah, they already have 1inch already has a Uniswap type platform called Moniswap. I personally haven't looked too much into it, but Blake, do you know if they have a token too, right? The Chai gas token, I believe.
Yes.
They might have another token too. I'm not sure.
The gas token, I think, is like a redeemable gas discount token. 1inch Exchange is great because it's so liquid. So if you're moving size, it's basically a smart order router. But in doing that, you're going to eat a ton of gas fees. So the G token was a way to, I guess, I'm not exactly sure of the kind of inner workings of it, but I know if you hold it, then gas fees are cheaper on 1inch. Uniswap, I haven't really looked into. It looked like kind of a lazy fork of Uniswap's code with a little token and yield farming added in. I try not to. I'm just using what's functional and what I'm familiar with. So I don't want to get involved with the wars and any sort of price speculation.
Well, 1inch is interesting. We're gonna have to explore them more. Jacob and I tried to sell $15,000 position in an LBA token yesterday on Uniswap, where there is a $225,000 USDT LBA pool, and it still was an 11.5% impact on price to sell $15,000, into the pool, which is a huge impact. And like, if one of these DEX aggregators could chop that up and spread that around and save us 11%, and we only impact the price by 50 basis points, like that's worth the price of admission in one trade.
Yeah, I think that's where this is all going to end up going. And that was the the one last thing about Sushi Swap, that was a really interesting piece of it. I don't know where, liquidity stands now, but, if you're looking at the, I believe it was the USDC Ethereum pool, the plus minus 2% liquidity, it was theoretically more liquid than Coinbase's Ethereum market.
Right.
That's very interesting. I mean, we don't do market orders, obviously, on Coinbase, but if we needed to find liquidity in a hurry, it sounds like we should start by looking at the pools on Sushi Swap.
Yeah.
Very, very interesting. We have to keep on monitoring this. Like I saw Ampleforth is now trading on Coinbase. Not Ampleforth, I'm sorry. AUMA.
Yeah.
Sushi's Yearn Finance has announced a listing. So all these DeFi names, all these platforms are moving on to Coinbase, which is kind of like interesting.
So those are two very different cases, I believe. The Yearn token, I think you have a voracious community, a rapid pace of development, a fair launch. We haven't seen a launch like that since, honestly, Bitcoin. So that one, the case is pretty simple. In terms of UMA, or I believe it's Universal Market Access voting token, that's actually I think it's kind of a nod to one of the funds that Coinbase Ventures is invested in that holds a heavy position in that token and protocol. So I think that's why UMA was included as one of these kind of first round of DeFi tokens on Coinbase.
A little self-dealing. That doesn't sound at all like Coinbase.
That doesn't sound at all like Space.
Yeah, or like Wall Street, for that matter. Well, thanks for that color, Blake. I'd be interested to learn more about that fund. If you have good transparency into Coinbase's venture fund, like let's talk about that on the next call.
Yeah, so I'll take you guys over to C.R.E.A.M Finance platform right now.
Blake, we want to thank you, by the way, for putting us into C.R.E.A.M Finance. We up 140% in a week where most DeFi names went down. Kind of a nice holding for our fund. By the way, the small coin fund that Jacob's been yield farming in and doing other DeFi things in, up 29.5% in August. So.
Take it.
Yeah, we're gonna get some recognition with that performance, Jacob. So Jacob, as I want to remind everyone on the call, is launching his own DeFi focused fund. The auditors have a really hard time handling stuff that's done on chain and on ledger and not on exchange. So it's going to be like a very sophisticated fund that's going to do DeFi initiatives exclusively, and it's not going to be audited in the traditional sense. So it's not going to be one of our public facing funds, but if you're interested in that, please contact me or Jacob. It will be, of course, auditable as can be because it'll be on chain, but like the auditors can't quite seem to get their heads around that. So well, we're not going to wait for them to catch up. But Etherscan should be able to tell you how he's doing pretty closely. Sorry, go ahead. C.R.E.A.M Finance. Let's hear about it.
Yeah, so I'll just start. So this is where it started out with, is like a compound type platform, borrowing and lending. And just looking at it this morning, just like preparing for the call, I was very interested in go try to figure out why SAPY is 18%. Like you can earn 18% if you just stick Ethereum in there, which is, I thought was very interesting. And it's way, in my opinion, it's way better than Compound in terms of like how many tokens it's offering, and like it's got Curve Finance pools, it's got REN Bitcoin, it's got C.R.E.A.M Finance, Wi-Fi, Balancer.
So C.R.E.A.M stands for Crypto Rules Everything About Me. I saw that at the bottom of the screen.
It is. Oh, I didn't even see that.
Crypto rules everything around me. That's what it is. Jacob, can you kind of do a little demo here and like what these on-off switches are and like what a transaction looks like? Don't actually do the transaction, but like walk it to the finish line so we can see, like, an example. If we wanted to, like, yeah, can you show us how you do a transaction here?
Yeah, I'm in a different wallet. I'm not in the 5th Kagan wallet, but I'll look. So basically, you supply to in order to borrow, like you have to put in the collateral to borrow. So you first put in the supply collateral, and this is something else that I was going to talk about. So it's in addition to the 17.52%, you've got another 9% that you're earning in C.R.E.A.M. You've got basically the yield farming, or just yield farming APY on top of it. So it's actually 25%. So you're earning 25% by just supplying. I'm not going to do this, but I'm not going to supply it, but you can earn 25% just by supplying Ethereum here.
And you've attached your MetaMask wallet to this browser, so this is where it's pulling the max from. That's what we have in.
Yeah, I'm in a different wallet than Fifth Kagan, but yeah. And so like how like normal Ethereum transactions work here is like, I don't know why it's not. Maybe I've already approved this, but you have an approval contract. So you basically approve. You basically tell, because it's non-custodial, so everything's coming from you. So like you have to give this platform permission to use your funds. So like the first one's like approval that gives the app the ability to spend your Ethereum, and then the next one is to supply the Ethereum. So you can supply Ethereum, then after that, you turn on the collateral button right here. Like once you supply it, it gives you the chance to turn on the collateral button, and then you can borrow. And I personally, when I was looking at this, I personally I like some of the stable coins because you can earn 100% on Curve. So, well, actually it's a little bit down now. It's like 60%, but like you can borrow 12% and earn 60. So like, let's go to USDC right here. And like the distribution APY on the borrowing is even better. So like the distribution APY pays for your interest rate. So you're earning 28% and it pays for your 12%. So you're basically earning 16% by borrowing. So that's why you see a bunch of people just pouring in money, because they're earning money by borrowing. So like the liquidity here is like 42 million. I mean it's just getting started. Wi-Fi is 50 million. Wow, this is interesting. I didn't expect this from FTT. But this is the YF vault. They shut it down recently, deposits. I don't know if they opened it back up on Yearn Finance, but that was a place where you could earn 60% APY on your Ethereum. So I have to go to the other parts of the platform, but this is the Compound platform. Then let's go over to the yield farming platform. This is the yield farming platform. So we're in the Uniswap pool for Fifth Kagan. So we're earning 829%. And then there's a balancer pool too. And then, so it's yield farming, just regular old yield farming. And then we've got the C.R.E.A.M swap, which is just basically another Uniswap. And they offer their own yield farming here, which is a lot higher. You're seeing like 1,000% for this one, 900% here. So yeah, the swap it's very similar to Uniswap. It's an AMM, just a regular automated market maker. And then,
so where does the house of cards fall? When does it fall?
This house of cards of this DeFi lending, crypto yield farming stuff?
It's not sustainable. Everybody's over leveraging 40x, 100x. Like this, it's just not. It's all nice and everything. Everybody's making money, but it's going to end badly. It's going to hurt everybody. It's going to put us in another 6-year cycle before we get back to the momentum. That's my scare.
So Chad, let's unpack
cycle.
that. How does it fail? I mean, if the prices fall on a piece of collateral, then like let's walk through that thought experiment. Like, does that cause cascading collapsing?
Well, one, I still think there's some bugs that are going to be found, like with Monero, right? You don't want to be in that position where you're Monero, right? You think you're one of those secure things and you get hacked, right? So we have a security risk because the hackers are back out hacking, like they have been, but it's out. So that's a security risk from the code base.
Okay, yeah. I mean, that's clearly one of the major risks. Hackers going to hack.
Right. I think the regulatory's coming. Right now, IRS is putting it on their 1040, starting to threaten people on if you made any trades, all that yada, yada, yada stuff. And so And then what material value is when anybody can mint an ERC20 and create currency out of thin air that's backed by nothing, right? So like, that's just scary to me. So.
Well, it's not backed by, they're all backed by nothing. Every single piece of currency, including the paper money in your wallet, Chad.
Well, our dollar is backed by real estate. So, I mean, if we look, we can get it, all right, it's, at least we have resources that people need or need to use that will come into play and become more valuable when the fictitious money goes away, right? So that's, you know, here and there, right? That's why gold has seen something, whether it has value or not. It's still a physical product people are still hedging on to have value. So I'm just saying, when you're dealing with a digital scarcity of something that can be minted at no real scarcity, because you can fork it, right? So we're going to see a ton more forks happening, and I'm just looking at value, right? Where's the value, the real material value? And it's getting scary because it is getting out of hand. That's just the frothiness in me coming out, like, okay, we're building stuff on House of Cards that are getting out of hand, and you're going to fake the next person out. And so I'm just looking at a situation where, is something going to put us back 6 to 10 years? We've got to go back and rebuild shit. That's going to take us a lot longer to go rebuild in the second leg, third leg, fourth leg. And if we can stop that through self-regulatory situations that people are trying to do, you know, catching a code hack, you know, like, can we get in front of that so we can kind of save that rebuilding the next cycle, which inevitably is probably going to happen. Just don't know when. Could be a couple of years, could be 6 months, could be 2 days. We don't know. It's going to come though.
Well, yes and no. I mean, you look at you know, the Forex markets right now. You know how much of the Forex markets are leveraged? 100%. They're levered 100x. The Forex markets are levered 100x, and they trade them in the first thing you do is you put in $10,000, you control 10 million, right? And that's the way the Forex markets have been running successfully around the world for 30 years. So yes, it's more volatile, and the code risk is real, but like the leverage isn't necessarily something. If you consider them these all to be currencies, the leverage isn't necessarily an issue, especially if it's on chain, because the collateral flows through to the contract holder. I mean, that's the whole idea.
Yeah. Nexus Mutual is 30%, right? They do 130% over collateralized. I'm just saying, some of these people are going no collateral. It just, I don't know. For me, it's getting a little out of hand. It's getting a little scary. And for me, it's a pausing moment. Because something's going to shake the trees, and it's already starting to shake. So I could be wrong, and I hope I'm not wrong. It's just, I spend a lot of time in this ecosystem. It's just, and I'm worried about that thing that takes another cycle down, that takes us down many years to rebuild trust, security back over again. Because we got to this point through many years of, you know, trial and error and stuff. So that's my only concern. So
I'm really glad you brought up Nexus Mutual, because we love Nexus Mutual, and we wanted to wait till it got above 45. Could I share my screen, Jacob, for a minute? We might mind stopping share so I can share. Oh, you got Nexus Mutual. Okay, you had how much was locked in it, but I'm more interested in the technicals on the price. Here's Nexus Mutual. Here's the 1 month chart. You can see that we have resistance here at 41, which we were struggling with yesterday, and then more resistance right here at 44. We just printed 45. That's it. This is off to the races today. I would buy, Jacob, let's buy some of this today. The next stop on the Nexus Mutual is right up here, $75. DeFi is back, Chad. Jacob, can you do 30 seconds on Hejik?
Yeah, so Hejik's got a IBCO, which is just a really fair token offering. So it's a 3-day event, and it's not going to be manipulated by whales. That's usually, so like whatever you put into, you buy Hejik with Ethereum. So whatever you put into the offering at the end of the 3 days, it takes all the investors' money and it settles at a certain price based on how much everyone puts in. And like based on game theory and like, well, in my opinion, like the best time to buy Hejik is in the last hour. So you can know like what price you're getting it at, in my opinion. So, but yeah, it's a 3-day token offering. It hasn't launched yet. It's go end on the 12th, basically. So, yeah.
And they're doing options on chain.
On-chain options for Ethereum and also wrap Bitcoin, which I'm excited about, the wrap Bitcoin.
Well, we write a lot of option contracts in our crypto income strategy. We do it with OTC partners, Galaxy and Genesis. And it will be interesting if we can see if we can do it on chain, because I love on chain, because on chain is safer than as long as there's not coding bugs, there's no counterparty risk, which is why we like on chain.